All right, guys. Today, as always, we have a wild episode. George from CryptoRUS looks at the indicators and is shouting, "We're at crypto winter levels. This is a golden buying opportunity." On the other hand, the InvestAnswers panel is analyzing billion-dollar seizures in Asia, bank manipulations, and technical chaos, warning uncertainty is total. Two completely different takes on the same market, and only one will hold up. As always, I take the most bullish and the most bearish takes of the day. In this case, the most bearish is fairly neutral, and I pit them against each other, and in the end, we'll see who's moving in the right direction. No more random opinions. Here we analyze data, flows, and consistency every single day, guys. Today, the bullish side is dominated by Georgia CryptoRUS. His thesis is rock solid. The market has reached such extreme oversold levels that statistically, we're looking at a historic bottom. For George, today's bounce is not random, but is driven by three explosive factors. The weekly RSI is at an all-time low. This is the key point. The RSI on the weekly time frame is crashed to levels we haven't seen since the crypto winter low, when Bitcoin was at $17,000, since the COVID crash in the 2018 low. For George, these are levels of total capitulation, where historically the real reversal begins. 2. The return of macro certainty, rate cuts. Today's bounce was triggered by new Fed governors who were signaling a rate cut in December, like we also mentioned in yesterday's video, citing weakness in the labor market. The probability has shot up to 81%. George argues that last week's fear was just FUD and that liquidity is now returning. 3. The technical hold in extreme metrics. Bitcoin bounced off the $67,000 support level. Additionally, metrics like the MVRV and capitulation data are showing signals identical to the crypto winter lows. This means that fear is at a maximum and the FUD would dissolve quickly. George's conclusion? We're not in a crypto winter, but the indicators are. When you see signals like these, which don't happen often, they are golden buying opportunities. Now let's move on to the cautious take from InvestAnswers. Now let's move to the complex side of the day. The analysis from the InvestAnswers panel, James, Murdy, and the CTO, Mandan. Here, the take is much more cautious. The market is a chaos of conflicting narratives and technical uncertainty. The panel highlights three critical areas that prevent them from being bullish right now. 1. Technical uncertainty and the damaged structure. Mandan points out a critical detail. We've closed for the second week below the 50-week moving average, a historically bearish signal. The CTO adds the golf analogy. If you can't see the ball clearly in the tall grass, you don't swing hard. The market is uncertain, and it's not the time to take large positions. They expect a retest of the lows, not a V-shaped recovery. The pig butchering theory and the Asian seizures. This is the key narrative to explain the violent crash. The US government seized 127,000 Bitcoin from a massive scam ring in Asia around October 8th and 10th. Murdy argues this triggered panic among other criminal groups who massively sold off their Bitcoin for fear of being next. Forced selling, not or get it. 3. The War of Accumulation and Manipulation. The panel discusses a war between titans, JP Morgan, BlackRock, and governments. Everyone arrived late and wants Bitcoin at discounted prices, guys. James highlights aggressive tactics like shorting MicroStrategy to suppress the price. It's a phase of tactical accumulation and orchestrated volatility. The panel's conclusion? The bottom could form around $80,000 to $82,000, the global cost basis. But uncertainty is at its peak. There are too many complex forces at play to declare the danger is over. So CryptoRUS says the technical indicators are at historic lows, the weekly RSI is screaming buy, and the macro context is favorable. The panel, on the other hand, says the market structure is fragile, there's been forced selling by criminal actors, and we've broken crucial technical supports. Maximum caution then. That said, it's extreme indicators versus structural uncertainty, statistical optimism versus a forensic analysis of the market. Now let's get to the objective data. George is right on a fundamental point. The weekly RSI at these levels is a rare event, and it's historically almost always marked important lows. The oversold condition is powerful. But the InvestAnswers panel correctly identifies the current fragility. The command point on the 50-week moving average is indeed critical. Until it's reclaimed, the structure remains weak. Furthermore, the pig butchering narrative explains the violence of the dump, forced selling that broke the supports. So my final analysis is this. The leverage flush highlighted by Murdy seems to be complete, and the cost basis at $82,000 is the real floor. If the market manages to consolidate above this level, George's bullish thesis will quickly gain strength, driven by the almost certain rate cut. However, the CTO's caution is justified. It takes time to build a solid base, not an immediate V-shaped recovery. I, as usual, don't take sides. I look at the flows, the leverage, and the liquidity. Always. Thanks for watching, guys, and I'll see you in the next video. Bye.